What if a country smaller than New York City just rewrote the rules of power for all of Asia, and nobody saw it coming? What if a tiny island with no natural resources, no massive army, and no massive population just became the most powerful economy in all of Southeast Asia? Not by luck, but by a plan so bold that it left every neighbouring nation speechless. That is exactly what Singapore just did, and Asia is still trying to figure out how to respond. While the rest of the world was watching US-China tensions, trade wars, and global inflation, Singapore was quietly executing a master strategy. It grew its economy by 5% in 2025. It attracted $27 billion in artificial intelligence investment. It positioned itself as the undisputed financial and technology capital of the entire Asian continent. This is not a story about a small country playing it safe. This is a story about a country that looked at global chaos and decided to turn it into fuel. Stay with us, because every single point we cover today will show you why Singapore's move has permanently changed the game in Asia. Point 1. The $27 billion AI bet. While most countries were still debating whether artificial intelligence was a threat or an opportunity, Singapore made a decision that shocked the entire region. It committed a total of $27 billion into AI infrastructure, making it the single largest AI investment hub in all of Southeast Asia. The government alone pledged $1.6 billion in public funding. The remaining $26 billion came pouring in from the world's biggest tech giants, Amazon Web Services, Google, Microsoft, and more, all choosing Singapore as their regional AI headquarters. The results were immediate. Singapore now generates 15% of NVIDIA's total global revenue. That is an extraordinary number for a country with a population of just 6 million people. Banks like DBS deployed over 800 AI models across 350 use cases, generating 750 million Singapore dollars in economic value in 2024 alone, with projections to exceed $1 billion in 2025. Singapore did not just invest in AI, it became AI. Point 2. GDP growth that defied the world. In 2025, the global economy was a battlefield. The United States was hitting countries with massive tariffs. The Middle East conflict was disrupting supply chains. Energy prices were soaring. Inflation was squeezing households from Tokyo to Jakarta. And yet, Singapore's economy grew by 5%. It did not just survive global chaos, it outperformed it. The government had originally forecast 4% growth. Singapore beat that target by a full percentage point. In the final quarter of 2025 alone, the economy expanded by 6.9%, one of the strongest quarterly performances the country had ever recorded. Manufacturing led the charge, posting an incredible 18.8% year-on-year increase, powered almost entirely by demand for AI-driven electronics. Wholesale trade and financial services were equally strong. Every single sector of the Singapore economy contributed to that growth. In a world where every major economy was struggling to hold itself together, Singapore accelerated. That is not luck. That is strategy. Point 3. Becoming the wealth management capital of Asia. Here is something that truly shocked even veteran financial analysts. In the middle of global instability, Singapore deliberately positioned itself as the safest place in Asia to store and grow wealth. The strategy worked beyond anyone's expectations. Assets under management across Singapore's 3 biggest banks, DBS, OCBC and UOB, grew 13% in 2025. That is nearly double the 7.6% annual growth rate recorded between 2019 and 2024. Singapore's household wealth is projected to climb 47% to 4.8 trillion Singapore dollars over just 5 years. And between 2015 and 2025, household wealth grew by more than 115%. Private bankers in the city-state are deeply confident. More than half expect assets under management in Asia's private banking industry to grow between 6 and 10% annually through 2030. Singapore's political stability, strong currency, AAA sovereign credit rating, and independent legal system are making it the go-to destination for wealth flowing out of Hong Kong, China, and the rest of the region. Point 4. Dominating the semiconductor supply chain. Asia's most powerful technological race right now is the race for semiconductors. Chips are the new oil. Whoever controls semiconductor manufacturing controls the future of global technology, defense, and artificial intelligence. Singapore saw this coming years before most nations acted, and in 2025, it emerged as one of the most critical semiconductor supply bases in the entire world. Singapore is now complementing Japan and Taiwan as a major hub for automotive power semiconductors, helping fortify supply chains for major European chipmakers who can no longer rely solely on East Asia. Biomedical manufacturing, which is closely linked to precision semiconductor processes, also surged. Singapore's biomedical manufacturing output reached 36 billion Singapore dollars in 2025, up from 27 billion in 2015, a growth of over 30% in just 1 decade. Multinationals continue to invest in complex, high-value output, including biologics and bioconjugates, products that require extreme precision, exactly the kind of advanced manufacturing Singapore is built for. Point 5. Leading Asia on climate and sustainability rules. Here is the move that genuinely shocked regional policymakers. While most Southeast Asian governments were still treating climate policy as optional or distant, Singapore introduced mandatory climate-related disclosure rules, the first of their kind in the entire region. Starting in financial year 2025 for all listed companies, and financial year 2027 for large non-listed companies, Singapore now requires businesses to follow international climate disclosure standards. Analysts are calling this the Merlion effect, a reference to Singapore's iconic mascot. Just as the European Union's Brussels effect reshaped global regulatory standards, Singapore is now doing the same for Southeast Asia's financial and corporate governance landscape. The key question for every other Asian economy is no longer whether to adopt these standards, but when. Countries that want access to Singapore's financial markets and multinational investment flows will have to align. Singapore has essentially written the rules that the rest of Asia will eventually have to follow, using its position as the region's leading financial hub as quiet but undeniable leverage. Point 6. Winning the digital asset race against Hong Kong. One of the fiercest competitions in Asian finance today is the race to become the digital asset capital of the region. On one side is Hong Kong, backed by the resources of mainland China. On the other side is Singapore, backed by its reputation for stable, transparent, and trustworthy regulation. And Singapore is winning. Bloomberg Intelligence confirmed in April 2026 that Singapore has a clear edge over Hong Kong and all other Asian rivals in digital asset infrastructure and product diversity. Singapore's offering is remarkably broad. Crypto derivatives, margin trading, institutional custody, tokenized securities, the full spectrum. What makes Singapore different from every competitor is political stability. In a region where investors constantly worry about government interference, Singapore's independent judiciary and consistent regulatory environment are priceless. tightening restrictions on overseas-focused firms further protects the system from systemic risk, reinforcing institutional confidence. As digital assets mature from speculation into mainstream finance, Singapore has quietly positioned itself as the regulated, trustworthy home that global institutions are looking for.
Point 7. The AI governance framework that Asia is copying. Singapore did not just invest in artificial intelligence, it wrote the rulebook for how AI should be governed across the entire region. In 2024, Singapore led the development of the ASEAN Guide on AI Governance and Ethics, the first comprehensive AI governance framework for all 10 Southeast Asian nations. This was not a symbolic document. It was a practical, enforceable guide that shaped how governments and corporations across the region would develop, deploy, and regulate AI systems. Singapore also established the United States-Singapore AI Partnership, creating a joint AI governance group that bridges Singapore's AI Verify framework with America's National Institute of Standards and Technology Risk Management Framework. On the China side, Singapore signed AI cooperation agreements with Huawei and Alibaba, both of which established AI research labs inside Singapore. Think about what this means. Singapore is simultaneously working with Washington and Beijing on AI governance. While the US and China fight each other in a technology war, Singapore is advising both sides and capturing value from both directions. This is geopolitical genius.
Point 8. Capturing 75% of ASEAN's AI investment. Here is a number that should stop you in your tracks. Singapore captures 75% of all artificial intelligence venture capital investment across the 6 largest ASEAN economies. To put that in perspective, Singapore attracted $8.4 billion in AI venture capital. Indonesia, the 4th largest country in the world by population, attracted $1.9 billion. Malaysia attracted just $371 million. A nation of 6 million people is out-investing a nation of 277 million people in the technology that will define the next 50 years. That is the Singapore model in action. This concentration of AI capital means Singapore is building a compounding advantage. The more AI investment it attracts, the more talent flows in. The more talent flows in, the better the research and products. The better the products, the more investment follows. Singapore is not just ahead right now. It is building a moat that will take other ASEAN nations a decade or more to cross, if they ever do. The gap between Singapore and the rest of Southeast Asia on AI is not shrinking. It is growing wider every single year.
Point 9. Turning global chaos into a financial advantage. Every other government in Asia viewed the geopolitical chaos of 2025 as a problem to manage. Singapore viewed it as an opportunity to exploit. When the United States announced sweeping tariffs on April 2, 2025, a day widely called Liberation Day, Southeast Asian economies panicked. Supply chains were disrupted, trade agreements were renegotiated, governments scrambled for damage control. Singapore responded differently. It used its AAA credit rating, independent legal system, and political neutrality to market itself as the most reliable financial safe harbour in the entire region. As Bloomberg Intelligence noted, instability in the global economy may actually benefit Singapore, which uses its reputation for careful regulations and strong currency to draw significant wealth management business from around the world. When money becomes afraid, it moves to Singapore. When companies need a neutral ground to do business between the United States and China, they move to Singapore. When wealthy families in unstable countries need to protect their assets, they move to Singapore. Global chaos is, for Singapore, a form of competitive advantage. That is a power no other country in Asia currently possesses.
Point 10. The long game. Singapore's growth blueprint to 2030. Singapore is not thinking about next quarter. It is thinking about 2030 and beyond, and it has already laid the foundations. Bloomberg Intelligence projects Singapore's GDP will grow around 3% annually through 2027 to 2030, outpacing every other developed Asia-Pacific economy. In years with favourable global conditions, growth could reach 4%. The government is also pushing ahead with major equity market reforms, including fiscal stimulus, tax incentives, changes to listing rules, and market structure reforms designed to revive Singapore's stock exchange and attract more international listings. Accenture projects that AI alone could boost Singapore's annual economic growth rate from 3.2% to 5.4%, while delivering 41% labour productivity gains. Amazon Web Services projects a $23.7 billion contribution to Singapore's GDP by 2028 from cloud and AI infrastructure investments alone. Singapore's household wealth is on track to reach 4.8 trillion Singapore dollars by 2030. This is a country operating on a
So let us step back and look at the full picture of what Singapore has just done. In a world torn apart by trade wars, geopolitical rivalry, and economic uncertainty, one small island nation quietly executed a master plan. It became the AI capital of Southeast Asia. It rewrote climate and governance rules for the entire region. It captured 75% of regional AI investment. It grew its economy by 5% when others were struggling to stay flat. It attracted the wealth of the world by being the one place where money is always safe. Singapore's move was not loud. It was not aggressive. It was not the kind of action that makes headlines in the moment. But it is exactly the kind of move that changes history. The lesson for every nation, every investor, every